Hello and welcome to the Federal. Today I'm joined by Mr. Anand Srinivasan, economist and crude oil expert, who is here to explain to us why the center has chosen to deregulate the sale of domestically produced crude oil and what would be its impacts. So, Mr. Srinivasan, how do you view the center's recent decision to let crude oil producers sell their product in the domestic market?
Before, the government used to fix the price at which it could be sold, which was normally at a big discount to international prices. But even now, this is not a big real reform because you're not allowed to export crude. So you have to sell it to the refiners. So who are the major refiners? You have to majorly sell it to either Hindustan Steel has one and Indian Oil has a refinery. I don't think it qualifies that Reliance can sell it to its own refinery at Jamnagar because most of the products are exported. In fact, the dependence on imported oil has gone up. We are now 85% importing oil. So if at all there was any restriction also, it didn't matter because it was just 15% of the oil. The real reform would have been if they allowed the oil companies to fix the price of petrol and diesel, which they claim is free, but it is not free. Everybody knows it's not free because oil companies are losing between 15 and 25 rupees per diesel or petrol. They are losing money. The government does not have, and at this point, even today, there are usurious tax on petrol levied both by the central and state government. So the central government is levying usurious taxes on these companies and sacrificing it. The shareholders of the public sector company are sacrificing their margins. Like Indian Oil shareholders are paying the price, Bharat Petroleum shareholders are paying the price. So this is basically to help a couple of their friends. And one of their friends, Kane, is struggling with debt. The parent company of Kane, Vedanta, is struggling with debt with its 13.75% dollar notes due. And this was before the rate started to move up. So this will not have any major material impact on the prices of crude or in India for the Indian consumer.
Will this help common people like us by reducing prices of petrol and diesel?
There's an under recovery of 15 to 25 rupees. So you are not going to get cheaper petrol or diesel. The pressure on the government is increasing because the rupee is continuously falling. The rupee reached 79 yesterday. I think it is 78, 89, 98 today. But it will sooner or later go to 80 rupees. So you have lost or dropped nearly 6 or 7% this year. So you have two things working against you. Crude is trading between $115 to $120 a basket.
Is this move actually aimed at boosting government's revenues and help state-run refineries get better realization for their product?
How will you do that? In fact, if the cost of input cost of crude will go up because of this. See, whatever they were getting 15, 20%, at least 50%, 15% of their crude, they were getting at a discount to open market prices. Even that will come at market prices now. So where is the discount? You are putting more strain on the state refineries. The state refineries will be forced to buy at a higher price from the corporates. There are only two major corporates which are going to benefit. One is Reliance and the other is Vedanta.
But if you're talking about crude oil, we have to take into consideration that India has always been only dependent on oil imports.
That is because we have not invested in technology. You have not had why the West is successful. It cannot, no public sector will have the efficiency to drill for oil or coal. It requires latest technology, it requires investment, it requires a private ownership to get oil out. But if the government wants me to invest and that it will take the share of the profits, that is not going to happen. So it is the short-sighted policies of the government, the sovereign government of India, irrespective of party in power, that has resulted in this problem.
Thank you, Mr. Srinivasan, for joining us.
Thank you.
For more
Thank
such
you.
interviews and videos, please log on to thefederal.com.